In 2025, a powerful shift is underway in global investing, and it's being led by what insiders call smart money. These are institutional investors, hedge funds, pension managers, and ultra-high net worth individuals. And increasingly, they're putting their capital not into fossil fuels or big tech, but into green energy funds. Why? Because the global energy landscape is being rewritten. With governments across the world committing to net zero targets, trillions of dollars are being allocated toward renewable energy infrastructure. From solar and wind to green hydrogen and battery storage, the transition to clean energy is no longer optional, it's inevitable. And for smart investors, that means opportunity. In 2025 alone, global investment in renewable energy is projected to surpass $2 trillion, a record high. Much of this capital is flowing through green energy ETFs, climate tech venture funds, and ESG-focused mutual funds. These vehicles not only align with long-term sustainability goals, they also offer exposure to some of the fastest-growing sectors in the world. Consider this. The International Energy Agency reports that solar power is now the cheapest form of electricity in history. Companies involved in panel manufacturing, grid infrastructure, and solar financing have seen double-digit growth year-over-year. Meanwhile, wind energy is booming in regions like the US, Europe, and coastal Asia, backed by both government subsidies and private innovation. But smart money isn't just chasing government incentives. These investors see the economic fundamentals. As energy prices fluctuate due to geopolitical tensions, renewables offer something fossil fuels never could: price stability and independence. Countries investing in local solar and wind don't just cut emissions, they also reduce their exposure to global oil markets and supply chain shocks. Another major driver is technology. Battery storage, once a bottleneck for renewables, has made dramatic leaps. Companies like Tesla, CATL, and LG Energy Solution are scaling grid-level battery solutions that allow clean power to be stored and deployed even when the sun isn't shining or the wind isn't blowing. That's turning renewables into reliable baseload power, something investors couldn't have imagined just a few years ago. There's also a generational shift in capital allocation. Younger investors, family offices, and sovereign wealth funds are applying stricter ESG standards. They're not just looking for profits, they want resilience, sustainability, and long-term impact. And green energy funds tick all those boxes. Of course, there are risks: technology volatility, changing regulations, and the sheer scale of transition. But smart money doesn't wait for certainty. It moves where the future is heading. And in 2025, the future is undeniably green. If you found this insight valuable, make sure to like this video, subscribe to the channel for more in-depth market breakdowns, and tap the bell icon so you never miss an update. Your support helps us keep bringing real, trusted content to millions around the world.